So I think the feds broke the housing market. I'm going to tell you why, as well as go over what to expect in the Orange County housing market in the upcoming months. If you've never tuned into the show before, hi, I'm Josh Alexander, your local Orange County real estate agent, as well as host of Orange County Housing Market News, your one-stop shop for all things Orange County. So if you're thinking of buying or selling a home anywhere in Orange County, make sure you hit that subscribe button because I put out new content every single week to make sure that you understand today's market, as well as give you tips and advice on how to be successful. So on today's episode, I'm going to be going over my October housing market forecast, so that way you know what to expect if you're thinking of buying or selling a home sometime between now and the rest of the year. So let's go ahead and get into it. The last couple weeks in the Orange County housing market, we saw inventory slightly go down, which it has been over the last couple months, only by about 1% in the last 2 weeks. So it is going down, but not very much. Now on the demand side, we saw demand drop by about 4% in the last 2 weeks. So it's continuing the trend where we're seeing demand drop just a little bit faster than supply. And that is basically causing the housing market to continue to slow down, which is what we expect to see during a typical fall market. So right now, the expected market time, so the time it takes for someone to put a sign in the yard, put their house up for sale, and get it into escrow is slowly going up. So 2 weeks ago, it was 48 days. Right now, it's 50 days. So it's going up slightly. Can you really feel it in the marketplace? Not too much, but you are starting to see things slow down in different neighborhoods and different markets where it is taking longer for homes to sell, and homes aren't going way above asking price like they were during the summer. They're usually going for at asking price or maybe slightly above. In fact, out of the last 500 sales in Orange County, about 54% of those sales went for at or above asking price, and the other 46% went for below asking price. So you're kind of seeing this really dead heat where some houses are going above, some houses are going below, and appreciation has really slowed down, which again is very normal for this time of year. Now the biggest story in the housing market, which has pretty much been the biggest story for the last 3.5 years, is interest rates. So just a month ago, interest rates were right around 7.26%, but today they're at 7.7%. And the biggest reason we saw such a big jump is because the feds came out this last month saying that they're going to have to keep rates higher for longer than they expected, and that caused the treasury bonds to go up, and 10-year treasury bonds are very closely tied to 30-year mortgages. So when those bonds go up, 30-year mortgages go up as well. And that's one of the reasons we saw such a big increase in interest rates over the last 30 days. So this is where things kind of get very weird in the housing market right now. So typically, you would expect that when interest rates go up, homes become less affordable, so less buyers are in the marketplace, and that would drive home prices down. However, that's the exact opposite of what's been happening this year. All year in Orange County since February, home values have been going up. And although they've been slowing down recently, home prices are still on the rise and they're still very stable going into the rest of the fall market. So why is this happening? Well, it goes back to the beginning of the episode when I said the feds broke the housing market. So let me explain what is going on right now. So right now, every time interest rates go up, we have a bunch of home sellers that have been locked into extremely low rates, anywhere from 2 to 4%, sitting in their house, and maybe they want to move to a new place that's bigger, a little bit nicer. However, when they have a 3% interest rate and they're looking at buying a new home at 7.5%, 7.75%, it just doesn't make financial sense for them to move unless they absolutely have to right now, because their mortgage payment would double just to live in the same price home that they have right now. So it just doesn't make sense for a lot of sellers right now. So the more interest rates go up, the less sellers are entering the market, which means inventory is going down, and that's matching buyer demand going down at the same time, keeping the housing market very stable. Now on the opposite side of things, which we did see at the beginning of February, when interest rates do start falling, so in February we had rates down into the high fives again, we saw a flood of home sellers on the market trying to get their homes sold so they can take advantage of those rates. But at the same time, we also saw a flood of home buyers into the market trying to take advantage of those rates as well. So when inventory went up, demand went up, and again, it kept the housing market very stable. So it seems like no matter what interest rates are doing right now, there's no way for the housing market to become so unstable table that we're going to see major price swings either direction. Now, do I think the Feds intentionally broke the housing market? I don't think so. They were looking at the larger economy, trying to figure out ways to slow down inflation. Unfortunately, this is just the side effect that happened, and there's really no getting out of this affordability issue anytime soon. Because no matter what interest rates are doing right now, supply and demand are moving together, and it's going to make sure affordability is going to be hard for a lot of buyers for the foreseeable future. Now, there are plenty of YouTubers and other people out there saying there's going to be a flood of foreclosures hitting the market anytime now, which is going to crash the housing market just as bad or worse as back in 2008. Now, last month, I debunked this and went over a bunch of reasons why that won't happen, but let's go ahead and give you one more stat to look at today just to show you how impractical and unlikely that is. So back in 2009, we had about 5,000 distressed properties on the market in Orange County, which represented about 43% of all active homes on the market. Can you guess how many distressed properties we have in Orange County total right now? 6. We have 6 distressed properties throughout all of Orange County. So that wave of foreclosures you might keep hearing about is just not coming in Orange County. People in mortgages right now are so much better qualified to be in their homes than they were before. They don't have adjustable rate mortgages that are going to go up and all of a sudden homes are going to be unaffordable. So really the only way you're going to see a bunch of distressed sales hitting the market in Orange County is if we had a giant wave of job loss. Now, the reason I bring up job loss is because right now, even more than inflation, one of the key things keeping interest rates high from the Fed is the fact that the economy is doing too well. Right now, the major swings that we're seeing happen in interest rates often have to do with job reports, unemployment reports, and right now the Fed is looking for signs that the job market is starting to cool, and that will allow them to start reducing their rates. So if you think about it, if people do start losing their jobs, which obviously I don't wish for anybody, but if they do, typically they're not going to be selling their homes right away. They have to go through the process. It could take 6, 9, 12 months before they get to a spot where they are forced to sell their home. And by then, interest rates will be coming down, creating a lot more demand in the marketplace, which is basically going to be able to absorb any of that inventory from distressed sales from anybody that has lost their job. So again, it's very hard to see supply and demand getting so out of whack that you're going to see major price increases or decreases anytime in the near future. So what does this all mean for anybody looking to either buy or sell a home in the housing market as we head into October? Well, let's go ahead and start with buyers first. So buyers, between now and the end of the year is typically the best time for you to start looking for homes if you're trying to get a deal. Right now, specifically in October, a lot of sellers are getting more desperate to get their home sold before the holiday season starts because they don't want to have to be worrying about selling their home, entertaining guests at the same time during Thanksgiving. If they're going to sell it, they want to sell it now. So there are more sellers open to going lower on the price, giving credits to you to be able to buy down the interest rates. So if you're looking for a deal between now and the end of the year, is going to be a good time for you to start looking. Now, is every home going to be going below asking price? No. But I have a feeling by the end of the year, you're going to see more homes sell below asking price than they are selling at or above asking price. So if you're in the market for a home over the next 3 months, keep an eye out for those deals and just understand that sellers tend to be more willing to make a deal to get their home sold right now before the holiday season starts. Now, on the selling side of things, if you need to sell your home before the end of the year, you need to get it on the market as soon as you can. Right now, there are still buyers in the market. It's still competitive out there. So if you can get your home on the market, you're going to have a good chance of getting your asking price for the home as long as it's priced correctly. However, as the weeks go on and we get closer and closer to the holiday season, less buyers are going to be active in the marketplace. They're going to be distracted by family and friends, different holiday get-togethers, and it's going to be put on the back burner until the beginning of the year. So you will see a significant decline in demand once we get to about a week before Thanksgiving. So if you want to get your home sold, get it on the market as soon as you can to take advantage of the demand while it's still here before we get into the holiday season. Now, if you have more questions about the housing market, or if you have a specific situation you'd like to discuss, if you want to set up a free 30-minute discovery call with me, feel free to do so. Depending on where you're watching this, you can either find the link in my bio, you can find it in the description below. It will be somewhere where you can set up that free 30-minute call for a time that's convenient for you, and we can go over your situation to get you a better understanding of maybe the best path forward for you. So thanks for watching today's episode. If you got any value out of this, again, please make sure you hit that subscribe button. And if you have any family or friends that might find this valuable as well, I would really appreciate if you shared it with them. So until next time, stay happy, stay healthy, healthy, and I'll see you on the next show. Bye, everybody.